Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 30th of September. So this week, another big week for macroeconomic news, concluding at the end of the week with the ever so popular non-farm payrolls event. I think on top of that, we're also going to have quite a week for Great British Pound traders, with plenty of news coming out from the party political conferences going on at the moment. And of course, there's upscaled rhetoric from around Brexit from UK Parliament as well. So going to be keeping those Great British Pound traders on their toes. So let's take a look at a few markets here that we're keeping a close eye on going into the start of this week. Now, if we take a look at the US indices, first of all, we can see that these markets have started to weaken off sort of rather considerably, but the markets sort of come down to some fairly sort of key technical levels. You can see here on the Dow Jones futures contract that the market now is sort of clearly putting in some kind of sort of double top sort of formation on price, but price is sitting around some key support levels, around this sort of 26 sort of 800 price point. If I come down to the lower time frames, you can start to see on the 4-hour time frame our 26 sort of 800, which is a level, a good intraday level, which has been sort of quite useful to us. But you can see how many times that's been tested in the past. The market this past week or so has been breaking through that and sort of putting in another support level around 26,700, where we can see we've had a good 3 tests more recently. Below that, of course, we have this key level here around 26,500. And you can see that the intraday structure of trends here, although being rather messy on this time frame, we've got clear lower highs as the market's sort of compressing into a sort of firm level of support. So generally speaking, if these levels sort of get taken out, then we might sort of see a retest of the next level. So 20 for me on the Dow, 26,800 is a intraday level. If that gets taken out, we can see 26,700. We can see how many times that sort of, when 26,800 is broken, 26,700 has pretty much been tested straight away. Below 26,800, 26,500 is the levels on my charts. If we just take a look at this and compare this with the S&Ps, the two markets are highly correlated. And if we come to the weekly chart, again, you can see here this sort of double top formation on the weekly. You can see the rejection style of the candles on the second test up here to 3,000 compared to the first time. The first time the market was sort of still looking quite strong. This time, the second time, we've got some long wicks on those candles, just indicating a bit of weakness in momentum here. And you've also got there the sort of weakness coming into the indicators as well, just indicating weaker momentum as the market sort of slipped back into yet another key level, which is this time around that sort of 2,960 price point. If we take a look at this on the 4-hour time frame, you can see 2,960 sort of tested multiple times here. You can see the price action around those sort of price points, and again the context of lower highs as the market sort of compressing down into it. So again, at this moment in time, the S&Ps and the Dow supporting some very well structured price points to the short side. So from a technical perspective, I'm still favoring this market on both of these markets short down to those technical levels, and then as those technical levels get taken out, down to the next technical level. However, being such a big news week and with the sort of key fundamental data coming out, it's always worthwhile being extra cautious with those news events. The results of those news events can have a dramatic effect on any kind of technical structure and technical trends in the markets. So with that being said, let's go and take a look at the commodities now. And I want to take a look at gold and silver because, again, both of these markets are correlated and both of them looking sort of quite interesting and telling a bit of a story. If we look at gold here from a daily time frame, you can see the 1,500 level. You can see that the market now, this morning, in fact, has sort of broken nicely underneath that level. And underneath, well, we got about another sort of price point just around 10 pips lower, so around sort of 1490 here, you can see where there is an extra sort of area of support. Below that, there's not a lot in the way down to around 1460, and that's a fairly sort of decent sized trading window that if this level gets taken out, we'll certainly be looking for shorting opportunities down to 1460 to the short side. Even though now we've started to get lower highs, this is going to put in a firmer lower low, even on this daily chart, and we've got weakening convergence here in our indicators too. Just to come and confirm that, if we come and have a look at silver, we can see that silver is looking extremely similar as well, even a bit more bearish here on silver. So we've got our lower highs, we've now got lower lows in silver. Silver's now broken the 1750 level, which was the structure point here, similar to that price point of 1,500 on the gold. Underneath that here, we've got a level down here just around that sort of $17 level, and looks like the market is sort of on its way down towards that sort of price point at the moment. Again, we've got sort of agreement with our indicators and momentum weakening off too. So looking at short gold and silver at the beginning of this week, also we're looking at weakness in the S&Ps and also the Dow Jones as well from a technical perspective. But from a Forex perspective, let's just take a look at a market here. Let's have a look at euro dollar. Now, euro dollar from the weekly perspective has been in a rather messy sort of short trend for some time. Last week, the market sort of weakened off significantly on the back of fundamental data, and the price has now sort of like come down to a level here that you can see on the weekly chart here. And if I just sort of zoom back here, you can see that this technical level has been a historical level that's been tested multiple times before. Now underneath that, there is another technical level, which again you can see has been historically tested multiple times. This is 108.50. So if the current sort of price at the moment, once this sort of level gets taken out, we could see a fairly sort of easy move or fairly sort of swift move down to 108.50. Below 108.50, then we've got that big drop down here to 106, and possibly a little bit in the between on sort of intraday timeframes, but there's certainly plenty of distance to the short side should those structure levels be breached. Now, if we come down the timeframes a little bit and take a look at the daily, you can see here on the daily we've got this very sort of quite well tested level that price at later last week broke and now has sort of bounced above it. Not surprising that the market's sort of consolidating around this area. It's quite a strong level. It was on the back of or after the back of a big move and a big sell-off. So we might expect at some point in here, early part of this week, to be putting in a lower high in the market. But for me, I'll certainly be looking, getting interested in this once this level is taken out as well. I'm looking at opportunities underneath that price point for euro dollar to the short side. So there's a few markets there that we're keeping a close eye on in the trading room at the beginning of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.